Good afternoon, trader. John Caruso coming to you here for May 10th with your currency outlook for the day. First, we'll take a look back. Some of the numbers we saw last week. Over the past couple of weeks, we have seen the economic news that's been reported come in increasingly softer and softer over the past several weeks. And that's kind of highlighted here with the non-farm payrolls report last Friday. We saw an increase of 160,000 payrolls when the market was expecting 202,000. So that's a pretty big miss on that number. And that kind of leaves the Fed rate hike odds for June at 8%. So pretty much non-existent. I think it's already a foregone conclusion. They're not going to bump interest rates in June. That's what it looks like. As we take a look at the currency markets, U.S. dollar, it's trying to extend its winning streak here to 6 days. Pretty much flat on the day. We do have some near-term resistance coming in at 94.56. So right now we've got about a 50 to 60% retracement going on from the slide that the breakdown in the chart that we saw in April to when we broke through that key swing low at 92.50. I believe we got as low as 91.88. Now the market's trying to retest the upside. I do think we are going to see some strong resistance here between about 94.50 and about 95 over the next coming sessions. So keep an eye out for that. Also, I think you're going to see a lot of the bulls start to trim some of these profits here over the next couple of days as we head into the end of the week. We do get a flurry of economic news coming out. Retail sales, PPI, consumer sentiment. Looking at the euro currency, not much to report on here. Flat to lower, down 6 ticks, 113.93. Really the only thing to highlight with the euro here is what kind of continues to hang in the backdrop is the potential for a Great Britain exit of the Eurozone. If you've read about it in the news, they've been calling it the Brexit. So keep your eyes peeled for more news on that to come. I think I'm going to go back real quick to the dollar. Also, the U.S. dollar, the strength that we've seen after we came off of that 91.88 level, that has also helped refuel the deflation trade in commodities. If you look at copper last week, between last week and today, we're actually down over 6%. Oil prices, gold prices, not so much oil today because oil is rebounding up 2% here today. But we saw oil slide all the way back from 46. I believe we got as low as about 42 and change over the last few days. So strong dollar certainly refuels the deflation trade. So it kind of keeps the Fed in a little bit of a bind right now because the Feds, they want to raise interest rates. They want to try to create inflation, but they're having a hard time doing that. As long as they keep interest rates low, that's going to put that's going to put some pressure on the U.S. dollar. So that's something to kind of think about there. Looking at the yen, 91.62, down 64. I do think the downside looks a little bit overextended here. We do have an immediate term bullish trend in the yen. We've been down, obviously inversely to the U.S. dollar. We've been down six straight trading sessions. Might not be a bad time to look at the bullish side for a quick trade. Something to think about there. Again, I mentioned it, retail sales, PPI, consumer sentiment at the end of the week. So we're going to be looking at those numbers as they roll in and see how the market reacts to it. So if you have any questions, give me a call, 800-669-5354. Futures and options on futures may involve substantial risk. It may not be suitable for all investors.